Hello everyone, this is Dr. Mihir Shah once again with another video. In this video, we are going to cover up the second part of our topics to be covered to easily get 15 marks, a last minute revision under the subject Innovative Financial Service. Okay, so we have already completed the first part where we completed the first topic based on factoring. Now, this is the second part. Here, we will be covering a revision based on hire purchase. So, let us see what are the sums we need to go through. Okay, now let us see how to solve the sum based on hire purchase. Okay, the question is given. We'll read the question once. It's given that on 1st April 2015, Lakshman Limited purchased a machinery for from SSC Limited on hire purchase basis. The cash price of the machine was 5 lakhs. The payment was to be made rupees 1 lakh on the date of agreement, and the balance in 4 installment of 1 lakh plus interest at 8% per annum payable on 31st December each year. So it is payable on 31st December each year. The first installment being paid on 31st December 2015. Prepare machinery account and SSC Limited in the books of Lakshman, assuming that the accounts are closed on 31st December every year and depreciation is 10% on original cost method. Okay, so that's the question. Now, so very first thing, okay, remember, the very first thing before starting the actual sum, always the very first working note that you'll have to make is number one, calculation of interest. Okay, we'll have particulars. See that everyone note down this format. This format will remain same for all. So you'll have opening cash price, down payment or installment amount, interest, cash price paid, and closing cash price, which is nothing but opening less cash price paid. Okay, so that's the first and the last. Okay, so this will be the fixed format. You can, if you want, you can number it. This is 1, 2, 3, 4, and 5. 5-step working note will be there. Okay, now let us see how you are going to use this particular stuff. Okay, now it's given here that the cash price of the machine is 5 lakh, meaning the machine is costing 5 lakh. So this is my down payment column. Always this will be my down payment column, the very first column. The machine cost is 5 lakhs. That's my opening cash price. The amount is 5 lakhs. The cash price of the machine is 5 lakh. The payment was to be made rupees 1 lakh on the date of agreement. So on that same date, 1 lakh was my down payment amount. Okay, and the balance in 4 equal installment of 1 lakh plus interest at 8% on 31st December every year, and you're going to start from 31st December 2015, 31st 12 2015, 31st 12 2016, 31st 12 2017, and 31st 12 2018. Installments are going to be of 1 lakh each. Okay, so now installment you're going to pay off 1 lakh each. So now let us see how we go about with this sum. Okay, the interest rate given in the question is, if you look carefully, the interest rate given is 8%. So I'll note down this as 8%. Okay, that's it. Now let us see how we solve. In the moment we bought the machine, the cost of the machine was 5 lakh. We paid down payment or the first installment amount as 1 lakh. Okay, on the day when you buy, there will never be interest paid on the same date. Okay, so what was the cash price which we have paid in the first year? We paid only 1 lakh. That was the down payment amount. So what will be my closing cash price of the starting date? Okay, 5 lakhs, may say 1 lakh we have already paid, so my closing balance will be 4 lakhs. Whatever is closing of the first part will become the opening of the next. So 4 lakhs is my opening cash price. Now we come to the end of that particular year. Okay, again the installment that I'm going to pay is going to be 1 lakh. They said installments are going to be paid in 4 equal installment of 1 lakh each. So I'm just noting this 1 lakh in all the 4 parts. Remember, the installment that you're going to pay will always come in cash paid. Okay, this installment amount will include your interest also. Okay, so that you have to remember. Okay, now we need to first calculate the interest. Now the opening balance was 4 lakhs. Remember, interest is always on opening balance. Okay, 8 lakhs, 4 lakh is the value of that. We have to take 8%. So the interest comes to 32,000. So now on 31st December 2015, you're not only paying 1 lakh installment plus 32,000 of interest. So total amount that you're going to pay as per installment will be 1,32,000. This is very important. Okay. Now to find the closing, we have opening minus the installment cash price paid. So 4 minus 1, 3 lakh is still amount pending. Last year, previous year ka closing will become current year ka opening. So 3 lakhs comes here. Again, on 3 lakhs, we will charge 8% interest, which is 24,000. So this installment value will be 1 lakh plus 24,000. So it will become 1,24,000. 3 lakh minus 1 lakh will give you balance of 2 lakhs. So 2 becomes opening. Again, on 2 lakhs, we will take 8% interest, which comes to 16,000. 1 lakh plus 16 is 1,16,000. 2 minus 1 is 1 lakh. So 1 becomes opening. On 1 lakh, 8% is 8,000. So I'm going to pay a total 1,08,000. 1 minus 1 is 0. At the end, it has to become 0 because we basically have paid up the entire value. Okay. So this is the very first thing that you all need to do is do the working of calculation of interest. Once this is done, now it is very simple to do the remaining posting. Okay. Chalo. So let us see how to go ahead with the sum. They said in the books of Lakshman, we have to prepare. So I'll write here. In the books of Lakshman, they ask you to first prepare number 1, machine account. So we'll have date, particulars, amount. Again, we'll have date, particulars, amount. Okay. Now, very simple. Okay. Now listen to this. It is just repetition. It's just repetition for the number of years. We have 4 years. Okay. So the entries are basically just going to be repeated again and again. Okay. Just listen to this very carefully. Lakshman, he purchased the machinery for what amount? You only have to look at the first price. For 5 lakhs. And from whom did he purchase? From SS Limited. So, and when did he purchase? Given as 1st April. So, 1st April 2015. On 1st April 2015, he purchased from SSC Limited. So, SSC Limited, I'll write here. Always just keep that order, okay? First, always will come from whom you're going to purchase. The value of the machine was 5 lakhs. That's it. Now every year in the asset account, we just have to know 2 things. One is the depreciation, second is the balance. Depreciation, balance, that's it. Okay. So on 31st December 2015, we have to note down by depreciation. Now what will be the value of depreciation? Look here, this is 5 lakhs. It's taken in April. Year ending is December. So it's only 9 months which have been used. So, and it is on straight line method at 10%. So 5 lakh into 10% into 9 divided by 12. So the value comes to 37,500. Okay. Now same date, 31st December 2015, by balance carried down. That's it. We tally this, so this will become 5 lakhs total on both the sides. When you subtract, you get the value as 4,62,500. Last year ka closing will become this year's opening. So on 1st Jan 2016 to balance brought down 4,62,500. Again same way, 31st December 2016 by depreciation. That's it. You just have to copy, you just have to note down the 3 entries in each and every year. So it's that simple. Okay, now this is for the full year. So 5 lakh into 10% will give you 50,000. The first year it was only for 9 months, otherwise it's all 10 months, the complete year. So full year ka debt 50,000. Okay, same date 31st December 2016 by balance carried down, I close this account, 4,62,500 on either side. From that I minus 50,000, I'll get 4,12,500. Last year ka balance will become this year's opening. So 1st Jan 2017 to balance brought down 4,12,500. Again on 31st December 2017 by depreciation. Now full year, so full year ka depreciation is again going to be 50,000, straight line method. Again 31st December 2017 by balance, I again tally this part, so this becomes 4,12,500 on either side. From that I minus 50,000, we get the value as 3,62,500. Last year 2018, so again it comes down 1/1/2018 to balance brought down, that is 3,62,500 on 31st March 2018 by depreciation. Again we are going to charge full year 50k on 31st December 2018 by balance. I'll tally this account one last time, 3,62,500, 3,62,500. When you subtract, you will get your final balance as 3,12,500. Okay, so this is how you'll have to solve your machinery account. Very simple, the same thing. You're just copy pasting the same accounts every year. Okay, so that was the number one. Second, now we have to make the vendor, the sellers, the hire purchase vendor account. So that is SSE Limited. It's also called as the hire purchase vendor account. Okay, again we'll have date, particulars, rupees, date, particular, rupees. Again it is copy paste. You just have to understand the first year and then it's always going to be copy. Okay, just remember in the first year. Acha, now look here, in machine it was to SSE, so in SSE it will become on 1st April 2015 it will become by machine, that is 5 lakhs. Now you just have to remember two things: installment, interest and down payment. Okay, down payment and installment I'll take it as one, DP and installment I'll take it as one term, and for the others it is only interest. So only two things you have to understand and remember, okay, in order to prepare the vendor's account. First of all, when you purchase machinery, you paid an installment, a down payment of 1 lakh on the same day, so 1st April 2015. I'll write here to bank. This entry is only going to be in the very first year, okay, because down payment was only done at the start of the buying stuff. Rest is only going to be installment of 4 years. In the same year, at the end of the year, 31st December 2015, we paid the first installment. So I'll write here to bank account. We made the first installment of 1,32,000, and on the same date we even paid interest of 32,000. This is it. You just have to remember installment, interest, installment, interest, installment, interest. So that will keep repeating again and again. So we will tally this account. So 5,32,000. Always your credit will be greater. Minus 2,32,000 will give you 3 lakh as our balance. So this will be 31st December 2015. See, if you look here, balance is 3 lakhs, so we got the 3 lakhs. So to balance carried down 3 lakh. carried down, so we'll bring it down on 1st April 2016 by balance brought down 3 lakhs. Now very simple, on 31st December 2016 we made the second installment to bank account. We made 1,24,000 ka amount, and on 31st December 16 we also made an interest of 24,000. That's it. We tally this account. So this is 3,24,000. From 3,24,000 we minus 1,24,000, we get 2 lakh as our balance, which is matching with the closing balance. 31st December 2016 to balance carried down. So on the next date, 1st Jan, this is 1st Jan, okay, 1st Jan 2017 by balance brought down, it is 2 lakhs. Again the same stuff, you just have to repeat the same stuff. On 31st December 17 we made the third installment of 1,16,000. Same date pay, we also paid the interest of 16,000. We tally the account and we will be getting on the same date balance. So it is 2,16,000. From 2,16,000 we paid 116, so 1 lakh is remaining. So that's the last balance. So it's balance, so we bring that balance down. So I'll write here 1st Jan 2018 by balance brought down 1,16,000. Sorry, it's 1 lakh. On 31st December 18 we made the last installment of 1,08,000 and we also paid on the last date interest of 8,000. So now if you look carefully, okay, your last account should always tally because we have completely made the entire payment. Okay, so this is how you'll have to solve the sum based on hire purchase. Again, a very simple topic. You just have to understand the first year ka data, and then after just copy paste with those values from the from the table for the vendor part, and here only depreciation for the machinery or the asset part. Okay, chalo, I hope everyone have understood that. With that, we will be ending this video here. Thank you. Okay, now let us see how to pass the journal entry from the question or from the problem based on hire purchase. Okay, so now what here I have done is I have already created 2 ledger accounts. So let's say if the ledger is of A Limited, whenever we prepare hire purchase, we have to create 2 accounts. One will be a machinery or the asset account, and second one will be the hire vendors account. So here I have already made up a solution where we have a machinery account and a hire vendor account. So once you all have asked to find, pass the journal entry, then how you all will have to pass an entry. See, solving part we have already done. Okay, we have already taken up a video. I've already made a video how to solve the problem sum in order to get the machinery and vendor account. So now in this video we are going to learn, see, suppose if the accounts are already there, suppose you have already solved and you got those ledger, how can you all convert this into journal entry, or how can you pass a journal entry based on the ledgers? Okay, chalo. Always see, the first step is always go date wise. Okay, always go by date wise. So we'll have to check in both the first date. Let's say from the machinery, on 1st April you're buying a machinery. Same here. So my entry, see, very simple. If it is from the left side, okay, when you're looking at the left accounts, the entry will always be machinery account debit to all these values, and when you're going from this side, it will always be the reverse part. So it will be dep account to machinery. Secondly, always remember कि balance, wherever you can see the word balance, okay, all these balance can never have a journal entry. Balance can never have a journal entry. So from machinery account, what are the entries which you can pass? So first entry will be machinery to B Limited, where you're buying the machine. After that, balance, you can't pass any entry. So the only other entry that you can pass from machinery account will be depreciation. So there are 4 depreciation in 4 years. and there is one where you have bought the machine. In a higher vendor's account, there will be machinery. See, so it's the same entry, machinery to B, and from here it will be reverse. So it will be again machinery to B. So that's same entry. Double entry cannot be passed. Okay, you cannot have a same entry being passed twice. Then there was interest here, and then there are banks account here. Remember, in hire purchase, the first year has down payment and installment, and thereafter there will only be installment, and interest. Okay. So see how you are going to solve, how you are going to pass the entry. Okay. Number one. On 1st April 2015, we have purchased a machinery. So my entry will be machinery account debit. First, always the asset. So it will be machinery account debit to B Limited, who is a higher vendor. So to B Limited account, the value is 2,80,000 on both the sides. So 2,80,000 being machinery purchase. Okay, that's my first entry. So I will pass a line through it so then we can easily distinguish it. So I'll just pass a line. So my first entry is done. Okay, after passing the first entry that you have purchased machinery, now the rule will be down payment, installment, interest, debt. Just remember this: down payment, installment, interest, debt. Down payment, installment, interest, debt, and one we have like a transfer entry. So now on this same date, we also did a down payment. You can see 1st April 15 ko there is a down payment which has been created. So on the same date, 1st April 2015, it's going this way from left. So B Limited to bank. So I'll have B Limited account debit to bank. The amount is 80,000. So your narration will be being down payment made. Okay, now everything now comes. So first we have done you purchase, then the down payment. So these are two fixed. Always you will start with these two. Now it is all simple. It will only be installment, interest, debt, installment, interest, debt, and transfer. So basically now 4 entries of every year will be recorded. So on 31st March 2015, okay, you were charged with interest, you paid the installment, and there was a depreciation also. So 31st March 2016 it will be. Okay, so interest, it will be interest to B Limited, interest account debit to B Limited, amount is 20,000 being interest charged. On the same date, we even made the first installment. So it will be B Limited to bank. So B Limited account debit to bank account. The value was 70,000. So 70,000 being installment paid. And on the same date, there was also depreciation to machinery. So it will be depreciation account debit to machinery account. The amount was 28,000. Okay, so remember these interest, installment, and machinery, these entries will repeat every year now. Okay, the down payment is only at the start, machinery purchase is also at the start, rest only those 4 entries will keep repeating. Fourth may say one last entry always, that will be after passing these 3 entries, that is interest, installment, and debt, will be a transfer entry which will be based, the entry will be fixed, P&L account debit to interest to depreciation. This is basically you're transferring them. So interest of the first year, interest charge was 28,000, and the interest was 20,000. Okay, and depreciation was 28,000. So the first amount which are transferred to P&L will be 48,000, being amount transferred to P&L. Okay, so like this is the first set. Okay, this is like the first set, first part of your first year ka all the entries. Only two entries are extra in the first year, which will be the down payment and I forgot to pass the narration. Okay, here it will be being depreciation charged. Okay, so this is like my first year ka. Now remember, these four entries will keep repeating: interest, installment, depreciation, and transfer. So we just have to keep passing. Now this was for 2016. Now we'll jump to 2017. Okay, now for 2017. Okay, so again the same order. First we'll put the interest, so it will be 31st March 2017. So my interest entry will be very simple. It will be interest account debit to B Limited. So interest to B Limited. The amount was 15,000. So I'll write here 15,000, 15,000. Same narration being interest charged. Okay, so I'm not passing the narration now. Same 31st March 2017. We are making the down payment. We are making the second installment. So it will be B Limited account debit to bank. 65,000 each. So 65,000, 65,000. On the same day, depreciation has been charged. So it will be depreciation account debit to machinery. The amount is again 28,000 for the second year. And three entries are done, and one last one will be the transfer entry. So same date it will be P&L account debit to interest to depreciation. Okay, interest was 15,000, depreciation was 28,000. So 15,000 plus 28,000, 43,000 will be our second amount transferred to P&L. Okay, so that is for the second year. Now similarly we will do it for the third and the fourth year. So these are the four entries that will keep repeating now. Okay, chalo, we'll start with the third and the fourth year now. Okay, so after passing those entries for the second year, I'm putting an extension here. Okay, we'll start with the third year ka now. So third year will be based on 2018. So again, 31st March 2018, it will be interest. So we are going to start with the interest part first. So it will be interest account debit to B Limited. Third year ka interest was 10,000. So 10,000 on either side. On the same date, we are going to have installments. So it was B Limited account to bank account. The third installment is of 60,000 each. So value I'll put it here, 60,000, 60,000. Narrations are same. Okay, so you can note down the narration. 31st March 18 May, there is going to be depreciation. So it's depreciation account debit to machinery, which is 28,000 again. Then on the same day, one last entry, you're going to transfer it everything to P&L. So P&L account debit to interest to depreciation. Interest is 10,000, depreciation is 28,000. Total is 38,000. Okay, so this was second last year, that is 2018. Now one more year is that 2019 ka. Again we will make into the same four entries will be passed. So again same order mein 31st March 2019, first interest. So I'll write here interest account debit to B Limited. The last year ka interest was 5,000. So right here 5,000. Okay, I pass the interest. Now the installment 31st March 2019, so it will be B limited account, debit to bank. The last installment was of 55,000, so I wrote it as 55. Same date pay, we have our depreciation, so it will be depreciation account debit to machinery account. Okay, again 28,000, so we pass the 28,000. Last entry on 31st March 2019, P&L account debit to interest to depreciation. Okay, so the amount of interest was 5,000 and depreciation was 28,000. So we have 28,000 plus 5,000 coming to 33,000. Okay, so with this, we were able to convert the ledger account of hire purchase into journal form. So only remember at the start you will have purchase of asset and down payment. Rest after you'll have the same 4 types of entry, okay, where we'll have interest charge, installment, depreciation, P&L, interest, installment, depreciation, P&L. So it will just keep carry forwarding. Okay, so I hope everyone have understood this. Okay, so with that we were able to complete how to convert ledger account of hire purchase into journal entry. Okay, chalo, with that we will be ending this video here. I hope everyone have understood. Thank you.
Okay, Malendu Coffee Works bought a coffee drying machine costing 6,56,000 from Xavier on 1st Jan 22 and paid a higher purchase basis of 2 lakhs was paid on signing the contract and the balance in 3 installment of 2 lakh each. At the end of December every year, interest earned at 15%. Life of the machine is expected to be 4 years. Depreciation straight line. You are required to calculate interest paid during the hire purchase contract. So they will just want the calculation of interest paid. So our working will be calculation of interest. Particulars. You bought the machine on 1st Jan. So 1st Jan. And every December you are going to end. So December 22, December 23, December 24, because the installments are paid in 3 equal installments. So 1, 2 and 3. Format is opening balance, down payment or installment, interest, cash paid and closing balance. We start with the opening balance. The machine was bought for 6,56,000. So that's very first thing. Now on 1st Jan, you also made the down payment of 2 lakhs. So we noted on 2 lakhs. First, on the same date, the interest is never charged. So cash paid was 2 lakhs. So 6,56,000 minus 2 lakhs will give you 4,56,000. The last year closing will be the next year opening. The first installment was made of 2 lakhs. Okay. Interest charge. So 4,56,000 into 15% came as 68,400 as the interest for the first year. From down payment, from the installment, when you minus 68,400, you will get the balance of 131,600. And from opening, when you minus your cash paid, you will get your closing balance. Again, closing of last year will become next year opening. Second installment was again 2 lakhs. On 3,24,400, take 15%, you get the interest. Installment minus interest is your cash paid. And opening minus cash paid is your closing. Again, next year closing will become the next year opening. On this, now, last year, remember, whatever is the opening, the same amount has to be your cash paid, because opening minus cash will give you nil. You need the final answer to be nil. Okay. Thereafter, from your installment, when you minus the cash paid, you will get your balancing figure as 26,940 rupees. Okay. So this is how you all had to solve, do the working of calculation of interest. Number 1. Second, they told you to pass the journal entry in the books of Malendu Coffee Work for the year 2022. Year 2022 is based on these two things. Okay. So now remember, in the very first year, what has happened? First, you purchased, then you did the down payment, then interest was charged, you made the first installment, there would have been depreciation because they've used it for 1 year. So okay, so minimum 5 things are happened in that year. So see how you pass the journal entry for the very first year under hire purchase. First entry will always be your purchasing. So entry will be drying machine account debit to Xavier because you are purchasing the machinery. Value was 6,56,000. Number one. On the same date, there was a down payment made of 2 lakh. So Xavier to bank, 2 lakh being down payment made. Okay, so that was on the very first date. Now, at the last date of the year, interest was charged. Interest always remember it will be on the buy side, so it's always interest account debit to Xavier. The first interest was 68,400. So 68,400 on either side being interest charge. On the same date, you made a payment installment. Xavier to bank, 2 lakh, 2 lakh. Depreciation was charged. Okay, so entry is depreciation to your machinery. Okay, how to get calculate the depreciation, because they just said use straight line method. Now you know the life of the machine was 4 years. So the working for depreciation was total value, total value of your machine divided by the number of years. So we got 1,64,000, and which we have used it in our journal entry. Okay, so first you bought, you made the down payment, interest was charged, you made the installment, depreciation was charged, and last entry transferring to P&L. That is, you need to transfer your interest and your depreciation to the P&L account. So entry is P&L to interest to debt. You take both the values, you add up, and you get your P&L ka transfer amount. Okay. So this is how you all had to solve the sum based on. The only two things were asked in this. So we solved the interest part, and we all also noted down the journal entry. Okay. So I hope you all have understood both the sums of 2022 question paper. Okay. So with that, we will be ending this video here. Thank you.
Tone Up Gym purchased a machine. So on 1st April, you purchase a machine from Neil on hire purchase basis. The cash price of the machine was 2 lakhs. The payment was to be made rupees 1 lakh on the date of agreement, and the balance is two installment of 50,000 plus interest. This statement means a lot. At 12% per annum, payable on 31st March each year. The first installment was made on 31st March 2014. Purchased in April, so it is 13-14 first year. Prepare machinery and Neil account in the books of Tone Up Gym for the financial year 2013-14 and 14-15. So 2 years ka we'll have to prepare ledger account, assuming that the accounts are closed every year, and 30 and depreciation is going to be charged at 20% on reducing balance method. Okay. So now let us see how to solve the sum. Now the very first thing we'll do is we'll make a table of calculation of interest, which I've already done. So I'm going to explain you all basically how to solve that particular interest calculation table. Okay. So the heading is interest calculation. We have particulars. 1st April 2013. Okay, 31st March 2014 and 31st March 2015, because 2 year ka data is given. Opening stock, down payment, installment, interest, cash price, and closing balance. This is normal. Now, the cash price of the machine, or the opening stock of the machine was 2 lakhs. So I've written here 2 lakhs. In the first year, we made a down payment of 1 lakh. So 1 lakh. So first, on the day when you purchase and you make down payment, there is never an interest. So cash price is 1 lakh. So 2 lakh minus 1 lakh. The opening minus cash price is 1 lakh. That's my first closing balance. Now be careful here, okay? First year ka closing will become next year, the next one ka opening. So opening is 1 lakh. Now, whenever they give you that some balances is made in installment plus interest, remember whenever that thing is get with plus interest, always remember whatever amount, okay, they have given us of the installment, that will be nothing but my cash price. Okay, and when I add plus interest, that will be my installment value. So here they told you, yeah, two installment plus interest. Since there is plus interest, this 50,000 will become my cash price for 2 years. So one is 50,000 here, and one is 31st March 2015, 14 and 15. Okay. Now come back to the year 14. Opening was 1 lakh. On 1 lakh, we'll have to take interest of 12%, which comes to 12,000. Okay. Now cash price plus interest, when you add up, the total installment that you're going to pay will be 62,000, which includes your cash price of 50,000 and interest of 12,000. Okay. Lastly, opening minus cash price, 1 lakh minus 50 will give you 50,000. Again, closing will become next year's opening.
Again, 50,000 pe we have to take interest of 12%, which comes to 6,000. When you add these two, it becomes 56,000. That's the installment value. That is interest plus cash price. Okay. Now, lastly, opening minus cash will become zero. That is nil. So if you get the final value as nil, meaning your solution for interest calculation is that. So which are the two interests in this? One is 12,000 and the other one is 6,000. For the first year 12, second year 6,000. That is the very first thing that was supposed to be found. Now next they have asked you to now prepare the actual account, that is machinery account. Now before starting machinery account, in machinery we have to find something called a depreciation, and they have told you use 20% depreciation rate at a reducing balance method. So very simple. A reducing balance means whatever balance you get from that you have to remove your depreciation. So for example, on 1st April 13 you bought a machine for 2 lakhs. So on 31st March 14 on 2 lakhs you will remove 20%, which comes to 40,000. That's your dep amount. So 2 lakh minus 40,000 is 1 lakh 60. Now that's your balance. Now under reducing balance method, whatever balance you get of the first year, on that you'll have to remove depreciation and go ahead. Okay, now since in this video I only asked you to prepare for 2 years. Okay, so my depreciation account for the next year will be on 1,60,000. So on 1,60,000, I will remove 20% and I get as 32,000. When you subtract, I get the value as 1,28,000. That's like a calculation of depreciation. Okay. Now, how to prepare machinery account? Very simple. Date particular rupees, date particular rupees. In the first year, always remember the moment you buy a machine or any asset, it will always be to your hire purchase account. So on 1st April 13 to Neil account, because you're purchasing it from Neil, amount is 2 lakhs. Okay, now very simple. We come to the next part, that is on 31st March 2014, the last day of the year. By depreciation, first year ka dep is 40,000. We took it 40. We tally, we get the balance as 1,60,000. Last year ka balance will become this year ka opening balance 1,60,000. Again same thing, you have to replicate. By 31st March 15 we have by depreciation. Our second dep was 32,000, so we have taken it as 32,000. Tally it, whatever answer you get will be your balance. So your balance is 1,28,000 rupees. Okay, so this is how you have to solve machinery account. Secondly, they ask you to find Neil. Neil is a hire purchaser. So a hire purchaser ke liye I need down payment amount, installment amounts, and interest. So what we do here, I'll just show you that table what we already created before. Now from there, very simple. You're heading Neil account, date particular rupees, date particular rupees. Always go in this order. First, on 1st April, you bought a machinery, so buy machine 2 lakhs. On the same day, you made the first down payment to bank 1 lakh. Okay, now 31st March appeared, so you have a charge with an interest. The first interest was 12,000. We charged it 12,000. On the same date, you made an installment, a first installment of 62,000. So on 31st March 14 to bank 62,000 first installment. That's it. So you bought a machine, there was an interest charge, you made the down payment, there was an installment. Four things. Once that is done, we tally, we will get our balance. So balance came to 50,000. Last year ka balance will become this year ka opening balance. Okay, again on 31st March there was a down payment of 56,000 and the interest charge was 6,000. So buy interest to bank tally, and since this was the last year, they only asked you to find for 2 years, so your account got tallied 56,000 on either side. Okay, so this is how you had to solve the sum based on higher purchase where there was written down value method or reducing balance method was asked. Okay.
I'll read the question once. Now this is based on hire purchase. The Vaibhu Transport Limited purchased truck from Hindustan Motor Limited on hire purchase basis. So here the purchaser is Vaibhu and Hindustan Motor is the hire vendor. The cash price of the truck was 16 lakhs. The amount was payable as 5 lakh on the date of purchase. That is nothing but your down payment. 4 lakh on 31st March, 4 lakh on 31st March 14. 412390 on 31st March 15. The Hindustan Motor Limited also charged interest at 5% on the unpaid amount on diminishing balance each year. It closes the account on 31st March every year. You are required to prepare Hindustan Motors account and interest account in the book of Vibhu Limited according to credit purchase method. Okay, so now let us see how to solve such kind of sum. Okay, for this, very first thing what you will have to do is, first we'll make a working note. Okay, we'll make a working note based on, what are the installment amount, what is the interest amount, what is the closing balance. For that we'll do a working note. So for that I will be creating a table here. So I'll just pause the video, make the table, and then we will start with the sum. Okay, now so this is interest comma installment calculation. Okay, we have particulars 2012, 13, 14, 15, which is the thing what they are given to us. Now opening balance will be a cash price of a truck. Okay, now in this they are giving you the cash price was 16 lakhs. So I'll note down this as 16 lakhs. Down payment, yes, there was a down payment of 5 lakhs at the first start of the year. There was no interest at the start. Whenever down payment is made, there will never be an interest. So your cash paid is 5 lakhs. So 16 minus 5 is 11 lakh. That is a closing. Last year closing will become current opening. Now installment, the first installment which was paid was 4 lakhs. Interest, they said it's going to be 5%. So 11 lakh of 5% is 55,000. So always remember, interest plus cash paid together becomes your installment. Okay, so 4 lakh minus 55,000, so that will become 3 lakh 45,000. 11 lakh minus 3 lakh 45,000 will be your closing 7 lakh 55,000. Again closing will become opening for the next year, 7 lakh 55,000. The next installment is also 4 lakhs. 755 ka 5% is 37,500. 4 lakhs minus 37,500 will give you 3 lakh 62,500. 755 minus 362 is 3 lakh 92,750. Again last year will become this year's opening. Last year, remember, opening minus cash should be 0. So I'll have to put down the same value, only then I can get a 0 value. Installment made was 4,12,390. So the difference between the two is 19,640. Okay, so that's my difference, 19,640. So with that we were able to complete this entire working. So now they have asked us to prepare 2 accounts. Okay, here they have asked us to prepare 2 accounts. The very first they said in the books of Vibhu, so I'll write here. In the books of Vibhu, we have to, number 1, prepare Hindustan Motor Limited account. And second, we have to prepare interest account. Okay, so what I'll do here is, first I'll make the columns and then we'll see how to solve the sum. Okay, so I'll write here date, particulars, amount, date, particulars, amount. Now remember, when you're making, now this is hire vendor account. Okay, Hindustan Motor is the hire vendor. So from here we are going to purchase. We have Vibhu here. Okay, so we are going to purchase something here. We are purchasing basically, the machinery account. So now in the vendors account, okay, remember, in the vendors account, the very first thing what you need to note down is on 1st April 2012 we bought a truck. So I'll write here, buy truck 16 lakhs. Okay, we bought a truck for 16 lakhs. Now on the same day we made a down payments on this side, 1st April 2012 to bank account. Look at this account. To bank account we made a down payment of 5 lakhs, 345. Now on 31st March 2013 we were charged with interest 55,000. So I'll write here 55,000. On the same day, 31st March 2013, we made our first installment. So to bank account 4 lakhs. This only happened in the very first year. Okay, now we will tally the account. So we have 16,55,000 on both the side. Now from 1650, when you minus 9 lakhs, okay, the value which will remain is the balance 7,55,000. So this is nothing but 31st March 2013 to balance brought down. Now the same balance on the next day, 1st April 2013, will become by balance carried down 7,55,000. Now only three, you just have to keep repeating interest, installment balance, interest, installment balance. So on 31st March 2014, we were charged with interest. So by interest, second is 37,500. Same date, 31st March 2014, to bank account, the round payment is 4 lakhs, so 4 lakhs. And on same day, 31st March 14, to balance. Only in the first year, remember, we have our down payment, so one extra entry is there. Otherwise, only interest, installment balance, interest, installment balance. So I will tally this part. So 77 lakh 55 plus 37 is 7 lakh 92,750. 792,750 minus 4 lakhs will give you 3,92,750. This is by, so it will come on 1st April 2015 by balance 3,92,750. On 31st March 2000 this is 14. So 2015, we'll have by interest. The third interest amount was 19,640. On the opposite side, 31st March 15. Now the installment what we paid was to bank account, which was 412,390. When you tally both the sides, it will tally. Okay, that's it. This is how you'll have to solve, to prepare the hire vendors account. Only remember interest, installment, balance. Only in the first year you'll have down payment. Otherwise, only the three things keep repeating again and again. That was the very first account. Next, they asked us to prepare interest account. So let's see now how do we prepare interest account. Okay, I'll just extend these lines. Okay, now for interest is very simple. Wherever you can see interest, the opposite end. This is by interest. So here it will become 2. 31st March, same date, to Hindustan Motors account. Amount is 55,000. Okay, that's it. The same amount now you have to transfer 31st March 2013 by PNL account 55,000, and this year gets tallied out. That's it. You just have to pass that entry. Same way for the second year, 31st March 2014. Again, I'll add to Hindustan Motors account. Second interest was 37,500. Okay, on the same date by PNL account 37,500. This account gets tallied. Now 31st March 2015 to Hindustan Motor account, third year ka, it was 19,640. So same date on the opposite side by PNL account 19,640. I tally it, and that's it. With that, this particular account is also done. Okay, so I hope everyone have understood this. So these are the two questions which appear in your paper. Okay, so I hope both the sums have been understood, solving both the sum. Okay, so with that we will be ending this video here. Thank you.